Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Another day, another record high. And that's with the S&P 500 squeezing out a small gain of 0.1% to finish at 6,310. And that's its 11th record close this year. Looking at Dow Jones Industrial Average, also in the green, up 0.4%, around 180 points to 44,502. On the flip side, we've got a Nasdaq Composite underwater by 0.4%, and that was bogged down by declines in tech stocks. So that's the first negative day for the tech-heavy index in 7 sessions. And helping us out this morning to navigate the markets, we've got Jay Woods. He is the Chartered Market Technician and Chief Global Strategist for Freedom Capital Markets. Good morning, Jay. How are you doing today?
Doing great, Ryan. Good morning to you and your audience.
Always great to have you on the show, Jay. Now, another day, another record high. Are you surprised with the optimism or the traction or momentum that's being seen in the markets right now, where we just seem to be getting a new high every other day?
Yeah, it's almost getting boring. We're just slowly making a new high. Just got there by a few points today. What's happening right now is the market's losing a little momentum. As you mentioned, the tech stocks were down, breaking a 7-day winning streak. But we're seeing other sectors come around, like utilities making new highs, staples coming back a little bit, materials and real estate sector doing okay. To me, that is what emulates a strong bull market, but we're not getting that momentum that we had that got us back from those April 9th lows. And what this market is doing is resting, digesting, almost a little anxious because we have a lot of news coming next week. We do have some great earnings tomorrow on Alphabet and Tesla, but a lot of people are focused not just on the Fed, but on that August 1st tariff deadline. And we're not thinking that something big is going to happen, but we're not optimistic that it won't. So everyone's kind of just waiting and seeing and just liking what we're getting from the earnings, but we're not getting that leg higher, at least with strong breadth and strong momentum. And that's why it's been kind of slow and steady. But you know what? That's good. I'll take that every day.
All right. So a bit of consolidation of sorts right now as perhaps folks take a bit of a breather and try and figure out what's going on. The small cap index, you pointed out as well, seeing some traction. In fact, it's nearing its first golden cross in 18 months. So that's something to watch out for. And next week, of course, the FOMC meeting, and then we've got earnings this week. So let's start with the earnings. So far, so good, would you say?
Yeah, so far so good is right. We have 20% of the S&P 500 reporting this week. Of the companies in the S&P 500 that have reported, 85% have beat. And the one thing we're not getting a lot of people guiding and pointing to tariffs. That is the one thing. They've learned how to kind of change what we're looking for. Because when you mention tariffs, you mention uncertainty, people are selling off. Now, if you miss, the companies are going to get hit. General Motors had a rough day today. Coca-Cola was okay. But overall, we're seeing pretty good strength, a little more optimism than normal. No one's going out there and saying the guide is great and we're confident about the future. But it seems as if they're navigating that conference call a lot better this quarter than they were last quarter. And then the big ones have yet to report. So let's see what Elon Musk says. A lot of people focused on Tesla and want to see what the Asian sales have been. He's been very polarizing and people have been pulling back. So Tesla itself, probably not going to knock it out of the park. But the rest of his company with the AI infrastructure, that is what people want to hear about. And the technology is what's keeping this stock afloat. And right now, I loved how you used technical jargon with the golden cross and the Russell. Tesla's sitting right now on a key moving average, its 200-day moving average, and is really at a pivot point. So I think the earnings, when they come out tomorrow, are going to be critical to see if we can take that leg higher and put the past of his politics side behind him and focus on what he's doing from a technology side going forward.
Yeah, he's got a lot on his plate. So last I heard, he was planning a new political party as well. We'll see if that comes to pass. Talking about trade tensions, on the Coke front, I'm seeing some news about a request from President Donald Trump calling for Coke to be made with cane sugar. instead of fructose syrup. What's your take on this? Is that going to work?
Yeah, the president is trying to get big, iconic American brands to produce their product here in America. So when he had to sit down with the CEO of Coca-Cola, he was adamant about making the sugar in his product, built here in America, and that caused quite a stir. But the fructose syrup, Orchard Daniels Midland, that stock got hammered on the news, thinking, oh my God, we're going to get rid of the original brand. But they're not changing Coca-Cola. So everyone who's loyal to that brand, including the president, who's a big Diet Coke drinker, they're going to try to come up with their own new branded Coke. Details still forthcoming, but it made big headlines. But it didn't impact the stock. The stock has been doing well. It's up 12% year to date. It's outperforming its peer in Pepsi, which is down 4%. Even though they had a good quarter, still outperforming. Just nothing that really knocked the cover off the ball as far as the earnings front goes. They beat because they raised prices. The volumes of their sales didn't go up. So Coca-Cola, it's treading water. It's having an okay year. But that story was big news. But the real news is we have no idea what the product's going to be like. And quite frankly, I don't want them to mess with my Coca-Cola. So I'm probably not even going to try it.
Yeah. So interesting for some folks to know that Coke is made differently in different places in the U.S., made with
Mexico. They love Coke Mexico here in the United States. It's unbelievable. Yep.
It's interesting to consider that. All right, next week for the FOMC meeting, and we've got all this in the backdrop, and then you've got Jay Powell worrying about his job. I'm not sure if he should be worried. So what do you take away from how he might talk about interest rates next week with that hang over his head?
Yeah, he's not going to talk about his job. He's there until he has to go. And what's going on now is the president's been very angry that he hasn't lowered rates, and he's trying to find any loophole he can to get him out. Now construction spending has gone overboard, and we need to get rid of him. And he didn't, disclose that to Congress, so they're going to try to get him for perjury. It's getting a little ridiculous. Market sees through it. The market knows that if he tries to fire Jerome Powell, bond markets spike, we're going to see yields spike, and we're going to see the market sell off. We've had 2 times where it came close that, oh my God, he may actually do this and fire Powell. Then he's backed away, and the market's rallied every time. Fed autonomy is very important. Their independence is important. And guess what? Even if he replaces Jerome Powell, it's a 12-member committee. So we're going to get some dissents. Christopher Waller, one of the voting members of the Fed, said he wants to lower by a 1/4 point. He is also up for Jerome Powell's job come next May. So there's a lot of political posturing, but right now the economy's doing okay. They don't need to cut. They're going to save it for maybe September. We got economic data as well next week in the PCE and unemployment after the Fed meeting. So right now I think Powell is just going to block it out. There's no desperate need to cut, although it would be great for the housing market to see mortgage rates go lower. I think it's going to be status quo, and all eyes will turn to the September meeting, and then, of course, back to the White House for the president's tweets and comments about how much he hates Jerome Powell.
Yeah, we'll watch out for that. All right, let's take a look at your playbook for the rest of the year. So you've got a bit of optimistic outlook for where the U.S. economy is going. So with that in view, where would you be leaning towards when it comes to equities?
That's a great question. I love the financials. The financials reported last week, and they were already making all-time highs. And what did they do? They kind of paused. The earnings didn't make everyone rush out and into these stocks, but what they're doing is they're digesting gains, and they're poised to really lead us into the end of the year. They're the 5th best performing sector right now, but what haven't we seen? We haven't seen any M&A activity of size, especially in the banking sector. We haven't had many banking mergers going back to the financial crisis. We've only had one since 2006 where a bank wanted to merge because they were healthy and they thought they could grow instead of a bank needing a rescue. The last banking merger was in 2019, BB&T and SunTrust formed Truist. Outside of that, you go back to BNY and Mellon in 2006. So I expect the financials to be very active. Look for M&A activity there. And then you look at Citigroup, JP Morgan, Goldman Sachs, Morgan Stanley. The IPO market heats up, and then they're going to be doing some big deals on investment banking and also volumes. Volumes are tremendous. We're getting some meme stocks every day. Open yesterday, and then today was Kohl's trading over 150 million shares. So the retail investor is hungry, and this is going to help the bottom line of those banking institutions and those that also deal with the trading side of things.
Yeah, I've also been seeing some job cuts also within the financial sector. Is that also a factor in terms of raising the productivity levels and the return on equity?
Yes and no. I mean, anytime the financial sector has job cuts, they usually do it methodically and they cull the herd. So they'll put some older people like myself out the pasture, and they'll hire some younger employees and new employees for a little bit cheaper. But they're always looking for the best talent. But when they bring in good talent coming out of college, they usually get rid of a few people up top and some of the worst performers. So in the financial industry, these are normal patterns. I'm not seeing massive talk of layoffs or AI replacing people just yet. Has it been on our mind? Sure. Of course, AI could replace me and be a guest on your show any day. But right now, the financial industry looks to be poised to be one of the best performers. And then tech isn't dead. Tech is just resting right now. The AI story is fantastic. I can't wait to see what Amazon, Alphabet, and NVIDIA do after earnings, because I think those three are really poised to take another leg higher.
Yeah, AI might replace some of us. I'm sure you're irreplaceable, Jay. All right. It's been great chatting with you. The fantastic Jay Woods. He is the Chartered Market Technician and Chief Global Strategist for Freedom Capital Markets. Jay, thanks again for your time and insights.
Thank you, Ryan.
All right, we'll catch up with you again next time. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.